Folks, welcome back. We're going to be doing another episode of Storytellers, and we are looking at the September contract for NQ for June 21st, 2025 for Friday's trading, June 20th. All right, we're looking at the daily chart here, and I'm going to take you quickly through this because you've been following me for a little bit of time. You know that we've been talking about that fair value gap right there. That's February 24th, 2025. And those lines now, and zooming in. I covered on a short little video for X on my X account, formerly known as Twitter. And I was posting these things before 5 o'clock in the morning Eastern time. And I'll show you the link in the comment section so you can click and watch it and follow along that way. So you can see what I said beforehand. It's one thing for me to talk about what price has done and give you an understanding about how narrative played a part in it, how I look at how framing a setup, looking for the opportunities, the areas in which the setups might form, how the bias, how the price should deliver, all those things, that takes a lot of experience. And it's very frustrating in the beginning because you see me and a lot of my more mature veteran students that are able to do these types of things. They can articulate what they believe is going to happen in the marketplace before it happens. And that level of prognostication doesn't happen overnight. And as much as you want it to happen very quickly, no one's going to sell you a course. No one's going to be able to give you a mentorship. No one's ever going to do anything to speed that up for you individually. It's something that you have to work for. You earn that. Okay. And that's why learning from me and learning this way of trading is very expensive because it requires a great deal of effort on your part. And if you don't put a lot of effort into it, you're not going to get the results you're looking for. And it's always been taught that way. It's always been sold to the public that way, that only the strong survive here. But I was talking about in that video, and it was posted at 4:50 a.m. Eastern time on Friday morning, so well before 9:30 opening. And I mentioned how the market was basically inside this range here that's shaded, and it's going to take some kind of event, and I believe it's going to be military related, like out of the Middle East. I think that's going to be a catalyst to do that. And because it was Friday, because it was a day going into the weekend where there's no opportunity for anyone that's in the marketplace to remove themselves from risk, I felt that it was beneficial for you all to be reminded that don't expect new buying to send us to new highs. Okay, so I referred to a very specific element of this daily chart, and I was looking at that section right there. And again, this portion of this wick, so the midpoint or consequent encroachment of it, to its close, that was going to be the heart of where the setups that you as students would be able to find, like a silver bullet, a market maker buy model entry, a market maker sell model entry, a unicorn setup, that type of thing, where the obvious things that I've taught as flagship setups from this compendium I've put together and gifted to the community at large globally, you'll be able to find your setups inside that little section of price action. But if you watch the video, and it's less than 8 minutes long, and again, I'll share that link in the comment section. So if you quickly watch the video and don't see it in the comment section, refresh the video and you'll see that link. It's down there. Stop watching this video and go watch the video I posted on X. Okay, so it'll explain to you what I expect in price, things that I don't expect to see, and things that I do expect to see. So it was hours before 9:30 opening, so there was no way for me to use delayed data, no way to um, game it, try to trick you or anything like that. And it was just basically me using the experience that I've gained over 3 decades and using the skill set that I'm sharing with you. I'm trying to teach you how to do these types of things, but it requires a long period of time doing back testing and then also explaining with the best of your understanding at present. When you do your logging in your journal, explain to yourself in commentary over top the chart with annotations as if you knew it was going to happen. And over time, because you're seeing these things repeat, you'll see that they constantly repeat. These same little signatures, these things I'm teaching you how price is going to respect certain levels at specific times, they tend to repeat a lot. And because of that exposure, you will by default gain experience that you can't purchase by a mentorship. You can't purchase it by reading a book. You can't gain that by being underneath to someone's signal service. Sure, you could have the best trader out there that's live streaming and giving you the entry, giving you the stop loss, giving you the targets, but you're really not learning anything except codependency. And I'm not a mentor that does that. I'm teaching you all how to grab a pickaxe, grab a pan, and go out there and panhandle yourself. You're going to have to find it yourself. You're going to dig in the dirt, find your setups. And once you figure that skill set out for yourself, no one's going to convince you otherwise that you haven't found your niche, your model, your plan. And you don't need to tinker with it. Once it starts making you consistent gains, that's it. You're locked in. Now, if you want to start another model above that, that's certainly up to you. But in the beginning, you need to slow down and don't look at all the things that I share as shiny new objects. They're just something else I'm teaching because not everybody has an affinity for an order block. Nobody has an affinity that all of my concepts are going to be for them. They have one or two, maybe three at most, and they live there. They bloom where they're planted. And by me saying I think that this little area in here is salient to the bulk of what's going to be required as a trader learns under me, you'll find your setup in that little red box. Now, I don't want you to take my word for it. You should listen to that little 8 minute or less video, and you'll hear me talk like that. And then I talk about how, because it's going into the weekend and the risks and the gap risk that's associated with doing that trading into the weekend, if you were to hold over the weekend, we don't know what's going to happen on Saturday and Sunday of any given weekend. But right now, because of the Iran, Israel, and the absolute guarantee that the US is going to get involved, we don't know what kind of repercussions that's going to bring about because everything gets a return. Everything gets a return. So, sure, we might get out there and start lobbing missiles in there and calling it defending Israel. And I'm not on either side, folks. I wish this wasn't going on at all. But it brings with it a great deal of risk to speculation. The markets are going to be hypersensitive to that. So if something really unexpected or something extremely over the top happens over the weekend, we may see a large gap opening. And I'm suggesting, because where we are at right now, nothing indicates that this market should go higher. Nothing indicates that it should go higher because there's so much risk. And large, deep pockets are not looking to go out there and say, well, you know what, I'm gonna put a large sum of money at risk right now because this is opportunity. It doesn't bode well for that right now. Equities are sensitive to, you know, anything that may happen inside the United States domestically. If we're attacked on our own soil, like Pearl Harbor, that's going to cause the market to tank. And if we have a cyber attack and starts shutting down things, that's going to cause concern because traders are going to be like, well, let me get my profits out right now because what happens if the grid goes down or I can't get into my account to log out or get out of my trade? They're just going to, okay, I want to get out, and that's it. So that level of concern is what I was trying to at least raise in the forefront of your mind on Friday morning at 4:50 a.m. Eastern time. That means New York local time for the folks that aren't privy about that. So I talked about how I didn't believe that the market was bullish. In other words, I didn't think it was going to go up, trade above this high, and then keep on trading up and take out that high. Like, I didn't want to see it go attacking that high and then run up there, because that would be bullish. That would be a scenario. If I was bullish, that's exactly what I'd be looking for. Listen to what I said in that video. I state that I believe we're going to have the market overlap this wick down here. And there's the new week opening gap for this given week that it will overlap. And I talk about how I don't personally believe that it's going to go below new week opening gap low. Do not take my word for what I just said. You need to listen to the video. I cannot go back on the X or Twitter and edit that video. It's there. People already downloaded it. They already have it. And some people listened to it but didn't hear me. They didn't hear me. So again, it's me telling you in advance what I think is going to happen and what the market actually did and how I executed on it. You're about to see now. But without stealing all the thunder from that 8-minute video, because I really talked longer than that video here, but I didn't say everything that was in that video. That high is Wednesday's daily high. So we're going to see that line referencing Wednesday's high because Thursday was a holiday. We're looking at this through the lens of running above that high, stopping out anyone that is short, and tricking individuals thinking that it's a breakout to the upside, so retail's going to chase that. I state in that video that I am not interested in doing anything until 9:30 open. That's interesting. So here we have the 1-hour chart. Now, I want you to think about how I taught in the past market structure, and I taught how I use long-term highs, intermediate-term highs, short-term highs. I learned that concept from Larry Williams, okay, and it served me well since 1995, and I believe it's still applicable today. For instance, we have this high right here. This high is a long-term high on this 1-hour chart. Why? Because to the left of this swing high, we have a swing high that's lower than it. And to the right of it, we have this swing high that's lower than it. But then we have a high to the left of this one that's higher than that one. This is an intermediate term. This is an intermediate term high. Long-term high, intermediate term high, intermediate term high. And everything on the downside with all swing lows is basically the same thing. But we're also noticing that when we're looking at long-term highs and intermediate term highs, when you have these large imbalances inside them, and I taught this in lectures before, people that have been listening to me that are strong students, veteran students, they know that I said this. Intermediate term and long-term highs that have imbalances in them are going to be high probability setups because this inefficiency is going to be much more meaningful than something that may form in a short-term high like this or a short-term high like that, even in here. So this long protracted buy side imbalance, sell side inefficiency, that's what I used as my framework on Friday. I extended this buy side imbalance, sell side buy side imbalance, sell side inefficiency, or BISI for short. You extend that forward. Okay. This is why I'm not supply and demand. Supply and demand is infancy. It's lacking a lot. It's a wonderful, wonderful beginning stepping stone, better than classic support and resistance for someone that's brand new and they're just looking for something to study, and it's not my work. But if you really want to understand the marketplace, you're going to have to look at inefficiencies, order blocks, and PD arrays the way I teach it, and you need to cast them forward as far as 60 days in advance or 60 days in the past. Look back. And that frame of 120 days, the market's always dynamically referring to all of that. It's a constant continuum of referring back to those same data points. And those data points are my PD arrays, premium and discount arrays. So by extending this in the future, going through all this, Going through all this, we see on Friday morning, it pumped up above Wednesday's high right here, trades above it, and goes to the upper quadrant and pierces it of this buy side and bound sell side inefficiency. These lines here, that's the upper quadrant, consequent encroachment, lower quadrant. And the low, I didn't want to put on it because I wanted you to see where that wick high is and that wick low. That's why it's no line on there. Okay, I'm just showing you the quadrant and the consequent encroachment level. So take a note of these right here, these levels, what they are. And when we drop down, you'll know what that stuff is when we drop into a lower time frame chart. And this is that inefficiency on the daily chart, or not inefficiency, but the section of price action where I said that you would see the bulk of the action for your setups that would yield the best. They would occur inside that little segment of price action. Now, right away, you can't appreciate what I just said there because you're looking at all this run up, which is the Judas swing, and you're seeing all this run down here. And that's what you, as a new student or someone that's an action hound, the people that go and watch live streamers because they're thirsty, they're hungry, they want to get out there and just chase somebody else because they think they know something that they're never going to be able to learn. You're looking at all of the full range, and you're not going to be able to do that as a new student. You're not going to be able to participate in that as new traders. You don't know what you're doing. So by me teaching you a way where you can just limit your focus to, okay, this is a segment of price action. Now I just got to watch it in reference to time. And I'll talk about that in a moment. But inside this little red box here, that's that portion on the daily chart that I stated from Wednesday's consequent encroachment of its daily wick to its close. That's what this red section is here. This orange box here, this large orange box, is this BISI here. So just make sure that you take a mental screenshot of what you're looking at right here, because when we go into lower time frames, you'll get lost in the sauce otherwise. All right, before I get into it, this was the magic that Mike, I hate being called Mike, but Magic Mike here pulled off. This was, as I was looking at price, this is what I was using to uh, frame it. I was recording it, and I use Camtasia Studio from TechSmith. And something's happened with their most recent release in their software. For whatever reason, it's happened to me half a dozen times now, where I've recorded a video and all of a sudden, either I'm doing something with hotkeys that it's sensitive to, or it's just glitching and has a bug in it. But I was taking screenshots as this trade was panning out, proving that number one, I was in it, it was live. This whole business of going back and forth doing screenshots and then going to X, I was pausing the recording long enough for me to jump over to X because I didn't want to see my personal stuff as I was going through my web pages in the video. So by simply pausing the recording, then I can go to another tab and show the X, post the chart that I just screenshot, and then come back to TradingView and then unpause the video so live data can start coming again. Well, I think in the process of doing that, it causes me to still record, but it treats it as a screenshot on the screen. So my chart did not update after a certain portion, and I don't know how to fix that. So if anybody is using Camtasia Studio's um, software program like I do, I pushed them in the past, but I got to be honest with you, if this is something that's just a problem or a glitch, then I'll have to start complaining about it. But if you're using it and you've encountered something like that, or a get around or a fix to that, I'd appreciate you let me know on X. Just something I can use to overcome it, because it's not happened just on Friday. It's happened half a dozen times just in the last month or so. And it makes me angry because I put a lot of work into managing trades. I'm putting in annotations and it doesn't appear because the recording will play up to a certain point and then it stops and it just looks like a screenshot. But then my mouse, you can see my mouse moving around and it's going over to the buy button or the sell button, whatever I'm in. And you can see me, going up and down with the cursor where if I'm moving the stop loss, but the chart looks just like this is here, like it's a static screenshot. So I don't know how to overcome that. And it might be a simple fix. It might be something I'm doing stupid that I don't even realize I'm doing. But it is what it is. And I know I'm jawboning right now, but I want you to understand that I had this recorded, but it just doesn't have that full play out because I was pushing the screenshots into X as it was going along. And you can see me entering up here above the Wednesday daily high and inversion fair value gap, and it drops down. Now, what you don't see here, what you do not see here, is the high of February 24th's SIBI, because that's exactly what I was keying off of. That's exactly what I was keying off of. That high level watermark of the SIBI on February 24th on your daily chart for September 2025 NASDAQ futures. That level is what I was looking at. And as it was sweeping above it, I was using the candlesticks in here. I was trading in the consequent encroachment of that candle there. I'm sorry, the rejection block of that candle. This candle's up close. Then this wick I used in this candle, I went into consequent encroachment there. And then I used the order block here, changing the state of delivery. And I went over this on X, so you can go watch that too. You can actually watch me do the execution entering in here. And you can see I left the screen like this. So you can see it's not market replay. And I constantly show you that it's live data. So it's not anything fake. It's not, delayed data. It's not like Ninja Trader where you can delay the data and do all kinds of, malarkey with it. Everything is as it was happening. But more specifically, it was going to deliver as I said it was going to deliver in that little 7-minute and a few second long video at 4:50 a.m. Eastern time on Friday morning. So as it dropped down in here, it went into that segment of price action. I told you from the daily chart that this would be the bulk of where the ideal scenarios for you as students would see. So if this is a market maker sell model, in here you can do distribution, and then the low of it here, as it hits it, that's the unicorn. That's the second stage redistribution where the fastest delivery happens, and it goes boom, there it is. Okay. I was covering all this in here because my son, my youngest, who still lives with me, had an appointment at 11 o'clock in the morning, and I was not told in advance. So I was trying to babysit this as long as I could, but I had to scale most of it off and left one contract on to get to new week opening gap high. And once it pierced that, you can see it trading there. But I stated in that video at 450, I did not believe it was going to go below new week opening gap low. And you don't see it happening there. Okay, and I'll show you the full data. Let's continue on. So here's the business. Here's February 24th's daily SIBI high. That's that purple or blue line here. And there's a high level line that's just above that, right in here. And the combination of the upper quadrant of this buy side balance, sell side efficiency on the hourly chart, that's what that red line is. You can barely see it, but it's there. And then here's the consequent correction of this buy side balance, sell side efficiency from the hourly chart. And here is the lower quadrant level. And there's no low or high level. Remember, because I didn't want that to show up in the hourly chart in this presentation. So it's this low of the rectangle here, and the high of that rectangle is the high and low of that 1 hour SIBI. I'm sorry, BISI. So we have a confluence of the upper quadrant of that 1 hour buy side balance, sell side efficiency. It is the February 24th of 2025's daily high of its SIBI, which is the same SIBI we've been talking about for months. You see how this is a key level? See how awesome it is to know that these things repeat over and over again? Contrast that with classic support and resistance. How do you know the level that you are looking at or want to see it react to? How do you know it's going to have a reaction there? You don't know that, but I know. I know that these levels are going to repeat. They're going to be extremely sensitive, especially at key times of the day. So what do we have here? The market used that portion of price action. I told you where the bulk of the volume would be coming in for movement higher or movement lower. The best setups that I teach for the classic market maker buy model, market maker sell model setups, reaccumulation. Accumulation, reaccumulation, smart money reversal. I was shorting at the very high candles using the logic that I teach with PD arrays. That's not found in Wyckoff. It's not found in any other there's no other school of thought that teaches what I'm doing here. Nothing. I don't care what you hear people talk about and they put this crap out there on the internet. It is garbage. All that stuff is garbage. I literally am roasting them every single week, proving that this stuff doesn't exist anywhere else. So by seeing this candlestick here, after it pierces above that, I know if I'm expecting it to drop down, because all this was a Judas swing. It's rallying up there, building in a premium. And I even tweeted or posted on X and said, built in a premium ahead of a wartime weekend. What could go wrong? That was my little hint to you, because if you watched the video at 4:50 a.m. that same morning on Friday, you already knew that I was bearish. You already knew that I told you it was going to overlap the new week opening gap down here again. That up close candle there is going to be a inversion fair value gap. Why? Because it's going to go up here and drop. Look at the bodies respecting it there. See that? I know that if that happens and we rally up, it's eventually going to sail through it. If it trades back up to it again, that could be an area where I could add to the position. But this also is another inversion fair value gap. But it's the first presented fair value gap inside of 9:31 to 10 a.m. So extend that forward. Why is it going to be inversion? Because it's bearish. It's going up here to go lower. It consolidates in here. The bodies are respecting what? The lower half. That's exactly how I teach my PDA race. If you're bearish, you want to see them respecting the lower half only with the bodies, and no trespass in the upper half of it when it's bearish, and no trespass with the bodies to the lower half of it when it's bullish. It's very, very simple. That's not hard. That's not complicated. The market breaks lower outside of its 1 hour buy side and balance, sell side inefficiency. And then once it does that, I want to see it start to pick up pace. Breaks lower. If you look at this level right here, this is the regular trading hours opening price on Friday. That's basically the 9:30 opening price. Right here, right there. So from there, it rallies up. So if we look at that opening price in relationship to where the previous day's close was, and that you can see down here is 21,961.75. And that's regular trading hours closing price for June 19th, 2025. So we have a premium gap. So what is it likely to do? Pull back down to try to make an attempt to close the gap. Here's a setup inside that area I told you. That would be the bulk of every setup that you would want to look for. This easy, low-hanging objectives where you can just get in there and take something I've already taught. It trades up to the high, sells off. Consequent encroachment, consolidates, breaks lower, boom, gap closure. Draw to this minor sell side liquidity. And then we have the February 24th of 2025 daily SIBI low. And it draws down from there all the way into that level, and then keys off of that back up into that section of price action, which is basically Wednesday's closing price. And then what does it do? Sells off. Second stage distribution. I'm sorry, second stage redistribution. Sells off into the new week opening gap, as I said it would. As I said it would at 4:50 a.m. Here it is, doing it at 11 o'clock in the morning. 6 hours plus later, to a degree of precision that Wyckoff could never dream of. Elliott Wave could never surf that wave. Couldn't do it. Couldn't stay on the board long enough. The market trades back up from near the low of the NWOG up to February 24th's daily SIBI low. And then what's it likely to do there? Drop. Where does it drop down to? Upper quadrant, consolidates in here, and then we'll have to move a little bit further. But I'm going to show you stripping it away. I teach that there's a 70% likelihood that the consequent encroachment midpoint of the opening range gap would be hit by 10 a.m. Eastern time. Well, what you know, I have the cursor on the screen as I did the screenshot here, and that's this candlestick right there. It's slamming into consequent encroachment of the opening range gap here, nails it at 9:59. So delicious. There it is, delivering exactly. That's algorithmic, folks. Okay. No one has ever taught you that. No one has ever said that. It's never been in print. It's never been taught even in any medium. None. But good old ICT gave it to you for free. Breaks lower, does all the business here. And we're going to move forward in time. There's that breakdown here, return back into regular trading hours close. That was Wednesday's closing price. And then it sells off, trades down almost to the NWOG's low, back up to February 24th, 2025's daily SIBI low, trades down to upper quadrant, hits it again here, sells off. Look at the bodies. Now, here's where ICT got it wrong. Ready? You listening? All the trolls are perked up now. He's admitting he did something wrong. Yeah, wow. You know, I wore the wrong pair of shorts today. My wife didn't tell me I look good with this shirt and these shorts. It's sometimes that messes me up sometimes. But in regards to trading here, what I messed up was I said it wasn't going to go lower than NWOG low. But look at the wicks. See, I was wrong. Look at that. It just went below it, and this one went below it too. But look at the bodies, because the bodies tell you the story. The wicks do the damage. And I'm going to leave it up to you whether you believe that that is salient or not, because price didn't do anything below that. There it is there. And then we just marked time basically inside of NWOG. One more time, hammered up February 24th, 2025 daily SIBI low, just to close in no man's land between NWOG high and daily SIBI low from February 24th. So I'm going to leave it up to you folks. I'm going to leave it up to you. If I wouldn't have had the last minute announcement by my youngest son that he had to be somewhere at 11 o'clock, I would have been all over this more. But I'm a dad too. Okay. And I did the best I could being in front of the chart. And while I was driving with my son, I can't update and trade the trade through my phone. On the way home after I dropped him off, then I was texting and posting to X, doing my usual facetious self. But nonetheless, this is what was done. This is the story behind what Price did. It was explained in advance how it would behave, and then using the very things that I taught and the levels I called out and the logic that I teach as it relates to opening range gap, bias, it was bearish. I was not long, I was not bullish, I was not trying to buy it. Everything was perfect. And you can never, ever, ever improve on perfect. Look at this, folks. That's a market maker sell model. Okay. I sold the high. I pyramided into the high. And I told you the narrative right here at 450. This is the the post. And I never delete a post on X. Twitter posts never get deleted by me. I have the ability to edit a post. I never edit a post. My word, once it's placed in public, it's it. It's over. I have to stand on it. Failure or success, it is what it is. And you'll hear me talk about this, and I'll actually put the link in the comment section. So again, if you don't see it right now, just refresh the video and it'll be there. But that's perfect, folks. Getting in here and then aiming for the NWOG low and saying it's not going to go lower. That's the high and the low of the day. And for the folks that really, really, really pay attention in the Twitter spaces, when I really like to jawbone and drop little breadcrumbs, I said that I know the weather the third week of June. I dropped these little things in there because I want you to pick up on it. They're like little riddles. Knowing the daily high and the low before it ever forms. That sounds unheard of, doesn't it? But yeah, here you have the proof of me doing it. There ain't nobody, there ain't nobody walking this spinning rock that's ever going to replicate that. And I always, always throw down the gauntlet. If you can do this, you'll prove it. Prove it, just like I'm doing. Prove it. And they can't. They won't. They will never be able to do it. I don't care what you trade. I don't care what you make. I don't care how many contracts you move. I don't care how many accounts that you're pushing through these fake prop firm demo account things. I don't care none of that stuff. This is what matters to me. This this level of understanding, this level of foresight. There ain't nobody else like that. There's no one else like that. And that's the facts. That's the truth. And if it was anything but the truth, somebody else, all the people walking around on this planet, not one of them can come out here and do what I just did. Right. That's what makes me ICT. That's what makes me ICT. When you see the execution video and you see where I place my stop loss, that was me just simply pissing in the cornflakes of every troll. I do that on purpose. I do that just to show you all who's talking to you. See, you think demo baller, you think the guy that rebranded everything. Find this in anything else. It's nowhere. It's never happened before. Like I said, you're living in a Gann moment. You're living in a Wyckoff moment. They're going to write books about what you're witnessing long after I'm gone. I'm a pioneer, trailblazer. And guess what, folks? I didn't earn this. I didn't earn it. This was gifted to me. And if you don't want to believe in God, that's your business. But if it wasn't for Him, I wouldn't have this skill. I wouldn't know this, and I wouldn't have the foresight. No one can figure this stuff out looking at price. No one can figure this like this whole panorama of what I've outlined. It's not a sampling of this, that, and the other thing. This is the market. This is the absolute market. And you're begging me all the time. In closing, I'll say this. You're begging me to do this live so you can copy me. That's all this is. Every person that asks me to do that, I don't care if they make money or don't make money, they simply want to copy me. That's it. Who wouldn't? I would. If we were in a different position, like if you were who I am talking right now and I had this skill set and I was listening to you, I would beg and plead, please, I want to copy you. I want to make money. I want to do these trades just like you. And I said this on Twitter or X this morning. The reason why I don't do this stuff in front of you is because the prices that I'm trying to get, they're very specific. They're very specific. How many people follow me? You know, the last time I did a live stream, I had 15,000 continuous watchers, but it went up to 21,000. What happens if just, oh, I don't know, 10% of them, 5% of them all try to get the same fill I'm aiming for? I'm probably not going to get filled. And a large degree of most of the other traders that are going to try to do the same thing, they're not going to get filled either. Because at every individual specific price level that I'm aiming for, there is not a limitless supply of liquidity at that price. Price will just move without me. So it'll distort or throw off or thwart my edge, my very specific element of entry. I'm going to make it handicapped by having all of you dogpile on it. And some of you actually might get the fill I'm aiming for, but I won't. And you've seen me trading with a live AMP account where my limit orders don't get filled. And I shared those publicly. Somebody else got filled, but I didn't. I wasn't wrong about the trade. I had to get out at a lower price instead of at the next to the near high, within 5 handles of the high. So it's not that I'm hiding from you. I could give two shits what anybody thinks because nobody's calling it like me. And they sure as hell ain't executing like me. And I have thrown down the gauntlet. Come bring your shit, Mickey Mouse, because you can't do this. Nobody can do it. Nobody but good old ICT. I have proven it. I've documented it. I have literally laid down a trail that this all leads back to me. And that's the stuff that sounds arrogant. See, they take sound bites like that right there, and they forget all the stuff that led up to it. Oh, this guy's a narcissist. He's egotistical. No, I'm combating AI because there's all these Fruit Loops out there that are constantly talking nonsense, saying I rebranded Wyckoff. That's straight bullshit. Oh, you took this from that guy. You took that. Whatever I have used and grown as a trader, I've always credited. Larry Williams, you heard it's not here, market structure, using long-term highs, intermediate-term highs, short-term highs. I look at the market through that lens as a setup is forming. I'm not every swing high in market. I'm not doing that. When I'm looking at a setup that's about to develop hours in advance before the market opens up, then I'm going to start looking at the swing highs and swing lows and see, okay, does it really line up there? And the wonderful thing is long-term and intermediate term highs and lows, they have SIBIs and BISIs in them. And I've said this before. You never hear that from Wyckoff. You don't hear about that stuff in anybody else's discipline. It's not there, folks. It's not there. Listen, listen. It's millions of dollars as a bounty if you can find one of my PD array as I teach it in any. It used to be find everything. No, 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 no. Just find one. Just find one of them. How I teach it in anybody else's bullshit before 1996. How about this? I'll make it even better. A shorter time span. Find it before 2016. How about that? You can't find it, folks. And all these people that say it, you simply turn it around on them and say, if he's rebranded it, show me his stuff somewhere else as he teaches it. Done. It's over. They'll clam up and they'll just say you're a cult member. You're brainwashed. And they walk away with no $5 million in their pocket, that's for sure. So, anyway, I had a lot of fun this week. I had a great deal of fun on Friday. And I think that if you are a very critical thinker that holds a firm grasp on common sense, you can clearly see that there's something here that's way beyond light years, way beyond everything else. That's it. There's nothing else to say about it. It's just simply technical science. And you're talking to the dean of Glean, where it literally is being given to you gifted. Now, this was not Enigma. Enigma would smoke this. And my Enigma, not the stuff that these people are out there pretending they got. They can use my name with it, but they don't have Enigma. They didn't short the highs like this. They didn't call the high and the low. They didn't do that. They did not do that. You will never. Let me tell you something, folks. I could walk out in court any given day and do this. That's why I'm confident. That's why I'm absolutely borderline arrogant. Who's going to say I didn't do this? Who's going to say that I did not call this? Who's going to say that I didn't outline it and it delivered? And for some of you just showed up and started watching me on Friday, you know, you're gobsmacked because you can't reconcile what just took place. How that happen? How did you know that? Right. That's the question I want all of you to think about this weekend. If you're brand new, think about that. How could I know that? How could I know that? Because no fucking live streamers are out there talking about it. They didn't tell you what the high was going to be. They didn't tell you what the low was going to be. See, that's what separates me from the boys. I'll say, Price, you will not go past this. You will not do this. Do you know who I am? Do you know who I am? Because some of you just don't know. But a long time from now, you're going to look back and figure it all out. But for some of you, it'll be too late. And the folks that are just simply here for the ride and you just want to learn how to do it and be part of the community and not be some douchebag that wants to look for some kind of argument or straw man argument, they're the ones that are going to succeed. They're the ones that say, you know what? I don't care about what anybody else thinks. I know I see something here that is beyond everything else in terms of precision, consistency, just real market wizardry. Real market wizardry. Market alchemy. Yeah. I take fear and greed and fear of missing out, uncertainty and confusion, and I take that and I turn it into precision. See, I understand when that market started rallying at 9:30 in the morning on Friday, that retail was thinking, it's going to go to the moon, baby. And I step right in front of it. Short, short, short. With a stop loss nobody can repeat. Nobody can trade like that. There ain't nobody. I don't give a flying fuck what you think you know, who you know, all that bullshit. You will never see another motherfucker do that ever, ever like that. There ain't one like it. There ain't one like it. And I've been begging. I have been begging for 10 years for some guy or some gal to come out here and show me that they're more precise than I am. And guess what? They don't. Why? Because they're in my fucking community taking notes.